Welcome back, everybody. This is the Prospero.Ai stock market live stream. I am your host, Steven. It is just me for today. It's just going to be me and George. Matt won't be joining us. So I'll take you through what we're seeing in the markets to start off this fine Monday. Hope you all had a great weekend. I'm going to do a quick check-in on the QQQ and SPY net option sentiment, which you all can find within Prospero. The markets are slightly red to open up the day, but hopefully they will come back throughout the day. If our net option sentiment, which I am pretty sure is still in a bullish level, I was looking at it this morning, so if it hasn't changed, yes, so the QQQ is at 56, so quite high, firmly in the bullish state, and SPY is at 44. So a little bit lower, but also bullish. So maybe we'll see this market go from red to green throughout the day. We have a lot of great topics to get into today. We'll take you through some of what the Prospero.Ai newsletter said last night. If you guys didn't read it, it was about parallel universes, but we'll take you through that and what we're seeing in the markets today and going forward, kind of an updated view on the world of the markets. And then we'll get into some of our topics that we have scheduled for today. First off is there's a port strike that is set to begin today at midnight across the East Coast and Gulf Coast. And it's going to affect companies that import a lot of the products that they sell. And even just a week of a blockage is going to cause major problems for some companies. And we'll talk about that, but then also if it'll have inflationary effects, which we all know too well that that's not good for the market. Then we have China stocks ripping. The government came out and said they're going to firmly support the markets in China, the Chinese government, that is. And since then, all of the China stocks that have just been beaten down for so long, I'm thinking Alibaba, Neo, JD.com, Baidu, many others have been ripping and rallying since then. And David Tepper actually commented on it, so I'll tell you what he said. And is it too late to buy that rally? Should you fade it? But then also another thing I want to talk about is the U.S. companies that have large Chinese businesses. Maybe that's a better way to go about playing this story that just unfolded. So we'll get into all of that. Some of those companies that have large Chinese businesses but are U.S. corporations, I'm thinking Tesla, Apple, Nike, McDonald's, Starbucks. If you want to hear any others mentioned, feel free to comment them right now. It won't be for a little bit until we get into that topic. And then, man, time is flying. 2024 is going by so quick. It is already the end of Q3 at the end of trading today. So I want to talk about what we can take away from the market's activity that we had in Q3, and if we can position ourselves for Q4 based on what we've seen over the last 3 months. And I'm also wondering if institutions get a lot more liquidity and we can see maybe volatility come back tomorrow with the turning over of the calendar. And then the next story is one that we've been highlighting over the last several months of streams, which is the AI impact on the workforce. And I saw this story and I couldn't help but think that maybe those are connected, where Amazon is now going to mandate a full-time return to the office for their employees, and the employees are not happy about it. So a survey of 2,500 people working at Amazon, 73% of them have considered quitting based off this turn of events. And I'm wondering if Amazon is playing some 4D chess and kind of because of the automation and effects they've gotten from AI within their business, if they're actually kind of wanting people to quit rather than having to lay off or fire. So we'll discuss that. It's just my own theory, but I wonder if George agrees. And then we have Ford, which is, surprising to me, the third largest seller of EVs in America behind Tesla and Hyundai. They are starting a new program called the Ford Power Promise. So I think they are looking to head in our full force into EVs. I'll tell you what the Ford Power Promise is. If anybody has a Ford vehicle, let me know in the comments. I owned a Ford Fusion a few years ago, very reliable car, but we've moved on from the Ford. But yeah, we'll discuss what that means for Ford's business. It's one of, as the market's ripped this year, it's one of those stocks that it's red year to date. So maybe there's some value there. So we're going to see if it's a value or a value trap, one or the other. And then last but not least, we have a topic about Netflix and Spotify. So we've covered how the changing environment for the entertainment space has hurt legacy media stocks. I'm thinking Disney, Warner Bros. But it seems like Spotify and Netflix are two that have been able to capitalize on it. And maybe those legacy stocks losses are these stocks gains. So we'll talk about how they've been able to hit all-time highs. Hello, George. Welcome to the stream. Maybe at the expense of those other companies. But if you had to choose between one of those two stocks going forward, which would you pick? It's probably a tough choice. And I'm wondering if any of our viewers own those stocks within their own portfolios. And that's going to be the last topic before we turn into the model portfolio update at the end. But as always, I see people are starting to trickle in here. So I'll just mention that if you have any questions for us, feel free to comment them. We're happy to answer them. We love addressing the concerns or questions that you have relating to the market. So feel free to do that as we're talking. If we're not hitting on a topic that you want to hear mentioned on the stream today, just go ahead and type that out. We'll get to all of your questions. Okay, but let me tee you up, George, for our first segment. So the markets have all opened overall red this morning. Actually, the IWM is up. So we're seeing one of those anti-rotation type days where the IWM is leading, but QQQ, SPY, and Dow are all negative. It seems to me right now like we're kind of in this quiet period, although I know we've expected volatility, but there's no earnings going on. There's not a lot of Fed talk. That kind of is behind us now. The only piece of data I believe we have for this week is the jobs report on Friday. So what is your updated view on the markets? Are we in a bit of a safer, maybe very short time period right now where the volatility will kind of subside for a week or two until we get into the swing of earnings again, or the election starts to make, get closer and closer and ramp up? Just what's your thoughts on what's going on in the markets today, this week, and in the near future?
I mean, I think we've been saying it. I think we're just going to see a volatile market. And, I haven't, what are we at QQQ and SPY net option sentiment? I haven't really even gotten a look.
50, I just looked when we started the stream, 56 for QQQ and 44 for SPY.
Yeah, see, SPY's a little back down. I mean, it's a very hard market to read, just because, we've had so much volatility and we've seen QQQ and SPY net option sentiment move like a lot faster than it typically does. So, even, previously, if we saw these like high, 50s QQQ, I'd feel very comfortable, like, 6 months ago, even just kind of like loading up on tech. But as quickly as it moves, you never know whether it's going to be a news event or it's just going to be, the market kind of having these guardrails high and low, or it's like where it just like hits these resistance patterns and then just like really swings in the other direction. Like it's very hard to get that enthusiastic one way or the other. So yeah, I think that's been something that, has been hard, and why I've kind of been writing out a pretty close to neutral long short portfolio, and just kind of doing my best in that strategy. And that's kind of like what I'd recommend anyone kind of stay as close to neutral as possible, just because it's, even in these like small cap runs, right? They go on a run and then they go on just as hard of a run in the other direction, as you mentioned, kind of with IWM. So it's hard to find a groove. I don't think the market really is picking a direction. The only thing that we kind of are confident in overall, and we kind of allude to this in a lot of ways, is like large cap tech, especially companies as they relate to AI. So that's why our overall strategy has just been, staying pretty even long short, taking things like Friday, that was a hard day for large cap tech, pretty seriously, right? We went into this week, for an example of a move that we got out of, like Broadcom was above this smaller, tech semi play onto. So we took onto over that because it was about a 10 billion market cap versus, Broadcom, which is substantially higher. So that's even like little things that we're doing where we're just making sure we adjust frequently and taking even small moves in the market pretty seriously. But it doesn't really allow you to get into a groove. I would say the groove that we're in overall, and we've kind of been an overall upswing in our returns the last few weeks, even though it's kind of been small. The groove that we're in is kind of just making sure we stay pretty evenly hedged. And if we see a pattern, 1 day, 2 days, that we kind of lean into it, as long as it looks like it's still in place. But yeah, it's been pretty hard.
It has been a difficult market, but the Prospero signals have been working. I believe I saw this morning we're still up 80% versus the market year to date. But I think there was kind of a funny moment from your recent trading activity shared in the newsletter. I saw parallel universes mentioned, and I guess when you're up that much versus the market, it's easy to shrug off a kind of funny mistake like that was made. But you want to talk to our readers maybe who didn't, or our viewers who didn't read the newsletter, and share your perspective on that story and what
Yeah, that's
happened?
pretty funny. We missed out on like a 35% gain last week in VST because I misread it as VRT. And it was kind of funny. I was explaining it to Matt, who I'm sure will watch this after, who's like the other person that joins us sometimes and helps me write the letter. And we had a very funny conversation where Matt's very religious and I'm more of like a science person, you might say, as like that's where I look to find answers. And it is kind of funny because like, I saw him over the course of the day, kind of like learn more about like, basically the thing, I would call it the inherent randomness in our universe, where it's just like, electrons are only in a place when you measure them, and until you do, they're kind of theoretically in a bunch of places. And these are like the basic, particles that make us up. So, one of the things, as someone that's been like predicting things for a long time, is it's easy for me to see outcomes as distributions, right? Even though when we see something, it happens, right? It doesn't mean it's a 1 and a 0, right? It doesn't mean there was an 100% chance something was going to happen or a 0% chance that something was going to happen when it doesn't. So, it's kind of easy for me to see that, where it's just like, out of how many, I think it's like 100, and I actually mislabeled the letter this week, out of 159 letters, right? That's the first time I've made like a literal typo, right? So we're talking about like less than a 1% chance, as I talked about in the letter. And I made like little other small mistakes, and that just happens. You record things differently. We're human, and that's I work 6 days a week. Early on, I worked 7 days a week when I wrote the letter, but now I like try to take Saturday off for my own sanity. But yeah, so I kind of joked about it being like a 1% chance in there. And like, even when you look at the numbers that way, we're probably talking about a less than 1% chance that I just recorded wrong. So that's how I try to look at things. And it's a good way, to use a sports analogy that I know Steven always loves. They always say that cornerbacks in football have to have a short memory, right? Because if you're too in your head about getting beat one way, you might get beat another way. So you kind of just have to let it go, get back to your, your core principles, and that's what I try to do. If you wallow and you get mad at yourself over like a mistake that you made, it could end up having it cause the next one. So yeah, like I think to your point, I didn't do the actual math, but I think something like a 35% gain on an annualized return might be like 2 or 3%, which would have been a nice lift last week, no doubt. But that's the nice thing about just making lots of cycles and whatever, and you just, you get back to it. Nothing you can do about that mistake. And as we joked about, I'm sure the 99 other Georges in the other parallel universes made that correct, and they were probably very happy about their week. But they might have also made other mistakes that I didn't. So I think that's an easy way to have a healthy relationship with your portfolio, because you're going to make mistakes. The best possible thing you can do. It doesn't mean you ignore. If you ignore mistakes that you made, then you're not going to get any better, right? That one in particular, it's very hard, like lapses in attention. It's very hard to do anything about that, so I don't really try to do much. But if you see something, I often write about in my letters when I kind of misjudge the market or misread the signals, and those are the important things to focus in on. If you think that there was something wrong in your process, for me, as some might have saw, I was like sick last week and I wasn't in my best headspace, taking a lot of like NyQuil and Sudafed and stuff like that. So that's an easy. We're a no excuses. We're a no excuses platform here. But I would have had the same attitude whether or not I was taking cold medicine or not. You just got to kind of let go mistakes. There was no problem with the process there unless you want to go into unless you want to go into like hanging out with my family where it looked like we passed something around between us. So yeah, not gonna really reevaluate that part, go that deep on it.
Well, I do think it's so important to highlight, the emotional aspect of and how you have to keep them in control when investing or trading. But also, I want to kind of bring up the fact that it's so cool that, I feel like a lot of financial companies wouldn't highlight a mistake and how their users and readers and viewers can benefit from it and like a firsthand experience. They kind of mostly want to portray, like superiority. I feel like I see a lot of in the financial companies. So I think it's really cool the openness that Prospero has and the willingness to share that firsthand experience of a blunder and how you get better from it for the people that follow our channels and socials.
Yeah, it's really important. I think that one of the important things about growing is like, yeah, you can shrug some of that stuff off and that's just emotionally healthy, right? But also it's just like it's also emotionally healthy to admit when you make a mistake, right? And there's a lot of people, the biggest problem I see with retail investors is, they'll say like, oh, it was the institutions or manipulation, or like I was right and like, the market was wrong, or like, that's what it amounts to. And it's just like, my attitude is always, if something goes wrong for me, there's something I did wrong. And it doesn't mean that it's always a fair shake. Hey, I've seen some really unfair shakes happen to me, especially in my Wall Street days. But blaming it other sources is not something that you can fix. You can only fix things in your process. You can't fix the fact that institutions are a lot more powerful than us, and sometimes you're going to get like shoved around a little, right? That's a fact of the market. You should know that coming in. And expecting that to get fair is a tough road. It's going to be a
Yeah.
tough long road. But yeah, let me jump in on the ASTS thing. ASTS is, when I looked at it, its net option sentiment was a little higher before it updated. But the main reason I picked that is like on a tough, what looked like it was going to be a tough, volatile day. And I was seeing a lot more opportunities I liked as bears, right? And ASTS just kind of looked like it was in the right. It had a good news event this morning. It kind of looked like it was the right pattern to be a riser today. And I didn't see a lot that I liked as a riser. And the other thing was TNET was an industrial stock that is kind of like similar market cap, about 5 billion. ASTS was about 7, and that was a green short. So it was a good hedge, right? If industrials were going to do well today, I thought ASTS looked like it was going to do better than TNET. So yeah, there wasn't any like pure signal that told me like, oh, net option sentiment was climbing, blah, blah, anything like that. It's just a stock that I'm comfortable with on an upswing that hedged a very similar short in terms of industry and cap well.
All right. And thank you, Jonathan, for your question. Good to see you in the stream. But I'll jump into our first topic of the day if there's no follow up from him. So there's a port strike along the entire East Coast and Gulf Coast that is set to begin tonight at midnight if no solution is found. I think it's widely expected that they are going to strike for some period of time. The CEO of Import Genius, Michael Kenko, is quoted as saying, "A strike of even a week will block the flow of hundreds of thousands of containers into the U.S." Is this going to be a problem for companies that import a lot of their products? Hurt their earnings reports this coming quarter if the strike happens and then goes on for an extended period of time? And also, could we see inflation kind of come back a bit because of this? Is this that important, or does it depend on how long it goes? How are you feeling about this event?
Yeah, I mean, one of the main issues we had that caused this deflationary cycle was supply chain, right? I think that was a big part of it. Like I know we said corporate profits was a big thing, but supply chain is, I mean, but it's one of those things that's just like very hard to forecast because we don't know how long it's going to go on for, right? And if you get too defensive, I don't think it's a bad idea, right, to be defensive right now. Obviously, like this is one of many things that we're saying, hey, be defensive. Like, because this is, and we say it a lot here, especially lately, there are great bull stories and great bear stories in this market. So if you're playing one side too hard, I think you're playing it wrong. So I think that, even something that we talk about, and this is a great example, right? We say going into the election, we're a little more bullish on Bitcoin related stocks because we see like pretty good outcomes, not terrible outcomes either way, right? Because even if Democrats like win and there's a contested election or whatever, like Trump, it's going to go great. That might be, you might get some of your like instability insurance that happens with Bitcoin. And the Democrats, I think, will be fairly fair because they see, Bitcoin voters as like a block now and blockchain and like, so even something like that, we're still not necessarily loading up right now because of the volatile markets. And like people always have to realize, and we talk about this all the time, institutions will short stuff that they want to buy, right? So Bitcoin's down today, right? And that could just be a case of shorting because they want to get it. They know it's going to run, especially if Trump wins, and they're just trying to get it as low as possible for the highest profits. So I think that is a really good example of like nothing is certain in this market right now. Even something that we're saying we kind of like on the macro level, we're still kind of saying is not that certain.
So it seems like this is kind of just a watch and see story, and there's not really moves to be made right now. It's kind of just a continuation on what you've been saying and going on in the market. So we'll have to keep our eyes on this and see how it develops.
Oh, that's much better. Sometimes it gets a little late in here. I'm glad I got up.
So this isn't changing your view on American stocks as of right now, but one thing I wanted to bring up today is the Chinese stock rally that we've been seeing since last week. Many of these stocks have been aggressively going higher. The government came out and said they're going to support the stock market and stimulate their economy. So that's, the major reason of why those stocks started to rally. But then David Tepper came out after this happened, and he said, buy everything. A direct quote from David Tepper, China related. So do you think it's too late after these stocks have kind of made a very quick move over the past week? And would you wait to see the dust settle? Or do you think now is the time to buy these companies, which, for like a 5-year time span before now, have just been getting wrecked?
Has Tepper lost a little of his luster ever since he made that terrible Bryce Young decision?
Yeah, I think
Yeah, I don't know. But it is like, before we get into the story, it is kind of interesting to think about like the Wall Street, like over to sports thing. Because I actually thought the baseball league was in big trouble when Steve Cohen bought the Mets, right? Unlimited budget, great analytical abilities. And like you do have like the Rays, right? The Rays GM was like a Wall Street guy before he went over. And there's lots of stories of like Wall Street people like going over, making the crossover. And like, the Rays have like a very good history there. So I do think it's like, I do think that's interesting. And maybe what the right formula is like a sports mind at like GM, but like, or sorry, a Wall Street mind at GM, but not like in control of everything. Because maybe like, Tepper and Steve Cohen are not listening to like the sports experts enough. They're just like, let's just be Wall Street. Let's do it Wall Street way. But that is always interesting because I did think that, especially baseball was in trouble when Steve Cohen bought the Mets because all he does is win on Wall Street, and not so much the same on the Mets. But we'll go to China. People who buy the trading letter would be very happy because Wednesday we had like PDD, Baba, like we had all these China names, SCCO, which I don't know. I'm due to look it up because I was like, I want to do some analysis on it, and I want to actually look at momentum score and how it rose heading into that. Because uh, it's definitely very interesting. The Wednesday before they started up Thursday, all these names PDD, Alibaba, I think there was one more, were just like spiking. And I didn't have the guts to pull the trigger in the investing letter. But we did have some wins in the trading letter, but it just shows, especially as it relates to China, people are making bets before these like kind of events happen. And we've seen it happen like a few times as it relates to Jack Ma and Jack Ma resurfacing and a couple other things. So yeah, I think that it's pretty interesting to monitor, but the problem is, and like I was actually talking to one of my investors who's lived in China, he knows things, very well there, and he was just like, they're going to take Taiwan. He was very specific. It's sometimes before 2027. I think that's maybe when some re-election is happening or something. But it's just even being bullish overall, you just don't know if Trump's going to say something. If Trump wins, even if there's no Taiwan takeover, like the tariff situation is an interesting one. And then their economy. I think it was something like, I think my investor was telling me it's something like 30% unemployment or something crazy like that. Like I want to look up unemployment with China because I was like,
I think amongst like 18 to 25, it is a crazy number like that. It's like in the 20s for sure. I think I remember
yeah,
seeing.
but I think he was saying that like it's considerably like, because what they report is probably not the real number, right? And I think that's what he was saying. But yeah, I mean, that's a crazy, like, because you have like economic and then you have like socioeconomic, right? And can you imagine what it would be like in this country, like if we had that many unemployed people? Like obviously it works a little better for them, because they can silence things, and the government, like people are a lot more afraid of their government there, so there's not going to be like as much unrest. um, but yeah, China's too risky. It's just like one of those situations. I mean, I kind of always say China is too risky. But that's because it always kind of is. There's these geopolitical risks. And it's like one of the reasons we always talk about NVIDIA. It's one of the reasons we're kind of always a little gun shy on NVIDIA. And we always like look at it. It doesn't run as high an upside breakout. I think part of that is like the inherent risk to that international business and how much they depend on it. Like, one of the things me and this investor were talking about yesterday was the idea that that China is like China. If we like, basically, if they took Taiwan and we sanctioned them, right? What a horrible situation like that would be. But there'd be certain companies like NVIDIA that would be really hurt by that. Like we sell into there too, not as much as they sell into us. But yeah, it's a very difficult situation to forecast. I mean, look, we've got something in our trading portfolio. Our trading portfolio is pretty big. It's not a bad idea to go in there with stop losses. But the problem with China is by the time the market opens, right, there's been so much movement in China, and it's like stop losses don't really help that much if the bottom falls out of something. So it's tough. We wouldn't recommend it, but I would say, as we said in our paid investing letter, if you were going to pick something, grab PDD. That's our recommendation of anything.
So just based on what you're saying, I'm like so curious about how these predictions of China becoming like the biggest economy in the world, how that can happen with so much turmoil seemingly happening within the country and their, economy, workers. But then also, if you want to address that point after that, do you think USA businesses with a large China portion of their business, I'm thinking Tesla, Apple, Nike, Starbucks, McDonald's, is that how investors could kind of play this, where it's a bit of safer and, these businesses are maybe good investments no matter what, but this is kind of like the cherry on top for them if China is able to stimulate their market? How do you feel
I
about
would
that?
say especially something like McDonald's, right? Is like, because I think if we sanction, we're much more likely to like sanction something like chips or like not buy their goods. But like, would they really shut down all the McDonald's? I don't know. I think that's a bit safer. And if they did, it might be more staged, right? So I definitely think that that's a really smart point. Like if you want China exposure, I think that is a much better, that's a much better way to do that.
Okay, so today is the final day of Q3, and how fast is 2024 flying by, George? So, tomorrow, beginning of Q4, last 3 months of the market, are there any takeaways that investors can use of Q3 to position well for Q4? And also, I'm wondering, since you have experience like within the Wall Street world, do funds get like extra liquidity when a calendar turnover like this happens? Can volatility come back tomorrow with kind of changing positions? Do they have to wait for a date like this? How does that work out for them?
They're much more likely to actually have weird things happening today at the close, right? Than tomorrow. And it's like it's actually for a reason that we talk about all the time, right? 13F filings. You file a 13F 4 times a year, right? This is one of the times at the end of each quarter you file them, right? And so whatever positions you have at the end of today is what you file. So actually, people are very sensitive about what they put in there. And we talk about like, hedge funds all the time that, they might buy a bunch more of a stock today that they're actually like own a bunch of put options on to confuse if they're long or short, or they might exit options that they'll get right back into tomorrow because they don't want people to know that they have certain options positions. And that's actually what's really funny about these 13Fs. If you look at them, a lot of these funds don't have options positions that trade options. So a lot of them will actually get out of their options today just because they don't want people to know what they have options on at all. So it's a very and for those that don't know, one of the reasons that we're actually changing one of our signals from institutional flow up to technical flow is because uh, of this problem, right? Because like they're showing certain positions, right? And then also beyond just like showing certain positions, they are we wait typically about at least 6 weeks to see what those positions are, right? So we're getting them on a delay too. So even though institutional flow can be important, it isn't that timely, and that's why we're moving to technical flow away from institutional flow. That should actually be out pretty soon. Yeah.
I have a solution to this problem. You ready? I'm bringing it back to the sports world. So, athletes, I'm thinking like particularly like boxing and fighting, are randomly drug tested. If these companies weren't like, it wasn't the last day of Q4, but instead like a regulatory body at any point over the last month could be pick a date and they'd have to, show their results on that date. You would get a much more clear picture and they wouldn't be able to do that. Am I right in saying that? Or is that something we should try and see going forward?
You're assuming that these governing bodies want to like rattle institutions. They don't want to do that, right? There's these rules were built very much in concert with institutions because they never want to like interfere with the economy, right? That's what that's what these the SEC doesn't want to interfere with the economy, and to a certain extent they're right, right? There's a bit of a balance between everyone knowing what you trade, right? And fairness, right? Because you should have, like, if you have some information that is yours that you've scouted on your own, that's legit. We're not talking about illegal information. There's plenty of people that can do good research that could find angles that other people don't see, right? And we don't really necessarily have a right to see them. I think that's fair, right? If you do good research, there should be some reward there. So there is a balance, right? And also, like, if you own a big enough stake in something, right, you do have to file a 13G, 5% or more, right? So you can't just like load up on a company, and you file a 13G when you take that position, when you change that position, right? So it's hard, right? I do think it would be pretty unfair if like a test happened when someone just took a brand new position that they, that they're loading into, that they have an angle. So it's it's hard. I do think that without disclosing who owned what, I think there should be some more regulations on just seeing the makeup of the company, right? That's what I think. Without saying these are who owns it, I do think what would be fair is if we could see the holdings and the options positions in a company, right? Without disclosing who a little more frequently. I think that would be the balance, right? I do think that would be more fair, but I don't necessarily, to my point, I don't necessarily think, it's fair for if a company like a financial firm does good research that we know every little thing that they own right when they own it, right? That's the other extreme, but I don't necessarily think the current system is fair. And like the big thing I think we should have much better disclosures of are short sales, right? Shorts. It's hard because like when we have tried to regulate, that's moved more things to the back rooms. But I do think it would be more fair if we had a more frequent update of that, just for the purpose of knowing like who was in it, the extent it happened, a little more frequent update on that. I do think that there is kind of some talk about that, but as we said, it's very hard because even though naked shorts are illegal, most reasonable people admit that they're still there. So it's not like the regulations are being followed there. So it's hard, right? Even if you regulate well, if people don't necessarily follow them, it's not there. And it's a delicate balance, because if you push people too hard, they'll find some way to hide it, as they have here. So
well, I was
I don't
thinking like
envy.
if there's more regulation, we're going to go from dark pools to darker pools, and that's how that's the result we'll see from it.
Well, no,
But
dark pools are actually an attempt at transparency, right? I think we've talked about that, right? Dark pool is because these transactions used to take place off book, right? And off book meaning like not in the market. so they like dark pools are an attempt at transparency, right? So that's actually I actually think that's an example of a good regulation, right? Because you took things that were off book and you give people some window into it. Granted, like the one thing that I don't like about dark pools is that I think anybody should be allowed to like they're just like, oh, their transactions are too big, like blah blah. I think anyone should be able to transact in dark pools. That would be my one adjustment, right? If you can show up and you can buy, a lot of shares at that price, or you just want a window into it, you want to see, I do think that should be what it is. And the reason is it isn't is people want some privacy about that. And that's a little annoying. Right. But it was a compromise, right? It's like, okay, take these off book transactions, put them here. You'll have some degree of privacy that way. But in that case, I don't think the privacy is there. But it's like it's one of those things where it's just like, to me, what's a lot worse is what Robinhood's doing than what happens in the dark pools, right? Because we don't know, like when Robinhood is like transacting and sending flow to Citadel at maybe non-market prices, right? We don't have any window into that. Like we at least can know what's happening in non-market prices in the dark pool. We have prints for that. I think Robinhood should be forced to show their prints when they move things between themselves and Citadel, right? That is, I think, the unfairness in the market.
yeah, I think there's a lot of really good points made in there, and I'm really curious about what you're going to say about the next topic, because I think it's it's my theory, but I think it's building upon something we've been talking about a lot, which is the AI impact on the workforce. So Andy Jassy is taking some pressure after employees revolt over a full-time mandate back to the office. So there was a survey done of 2,500 Amazon employees, and 73% considered quitting, according to the results, because of this new back to the office mandate. But I'm wondering, is Amazon kind of playing 4D chess, and they don't want to lay off or fire more people, and they're kind of like, if you guys want to go, you can go. No one's holding you back with this kind of story because of the AI benefits that they're getting within their business. So do you think that could possibly be what we're seeing?
I hadn't thought of that until you brought it up, and I think that's a great point, right? I think we might need it. There was this whole like quiet quitting where like in the pandemic where people were like just not really showing up for work and just like waiting to kind of get fired. I think this is kind of the inverse about of that, right? Jobs just being like, oh yeah, we'd love to have you. Just like you're gonna need to come in every day, and like lunch will be 15 minutes, and like I'm not like basically just like make it as annoying as possible so people quit, right? Because they don't want to lay people off just because it's expensive, and we've talked about that. But I think they also don't want to lay people off because the story around it, right? And I do think, yeah, I think that it's a win-win, right? I think the thing about office work, right, is office work, if you have people that aren't self-motivated, they're going to do more work, right? For me, I don't want to hire anyone that I don't trust to be in their home and still produce work, right? That's just my personal thing. And like, but I don't have like a huge company. I imagine that would get pretty hard to vet everyone. Although I have heard that the Palantir CEO vets everyone himself. And I was like, oh, that's an interesting story because I kind of like to do that. And I don't know him, but of the people that I've like, of the CEOs I've read about, like that's the person who kind of like sounds the most similar to me. But like basically what I think is going to happen is I think we're going to see a lot more of that, right? And it's a win-win for Amazon, right? Either they come in and like especially all the people that kind of need the structure to do more work, they'll be there and they'll get more work out of them. And then the people who that offends, they'll peace out. Now, what I will say is like I will say that like the people who that offends, right, are probably like they might be better workers. They might be people that just want to work less and have a remote job where they can work less. But I do think we're going to see a lot more of that, and I think that's the same kind of thing that we like. I think that's the same kind of thing we're going to see in a lot of places where it's just like, yeah, if your goal is to automate things a lot more, you don't really want to get caught firing people. So I think that we're going to be an interesting. I also think we might see some interesting things where we see less hiring out of these tech companies, and they just kind of like wait for people to drop off. But that's definitely something to keep our eyes on.
Hmm. Yeah, I think maybe just this one story isn't enough, but if we see it across big tech, we'll be onto something then. And I looked up Palantir has over 4,000 employees, so that's pretty cool. It's true that he is a part of the interviewing process for all of them. Um, Spinning to our next topic of the day. So I was surprised to see this, but Ford is the number three EV seller in the US behind Tesla and Hyundai. And it looks like they're diving headfirst into trying to maybe become number one over time. So Ford is introducing something called the Ford Power Promise, where if you buy an EV from them, they'll give you a free at-home charging installation. I think the thought behind it was a lot of people still kind of don't trust the EV charging network. So this will kind of put people at ease buying an EV if they're going to get a home charger. What do you think of Ford? It's one of those stocks that it's still negative year to date, even though the market's gone up. Is it a value? Is it a value trap? Do they have potential in the EV space? What do you think of Ford right now?
Well, I see a 9 upside and 66 downside, and the option sentiment going in the wrong direction. So I don't think great. I mean, we talk about this a lot. The issue with Ford is that and the American automakers is they have these like huge, powerful pensions, right? And they kind of have like a drag on their business, and they haven't had a fix to this. And this is kind of like the opposite side to unions, right? Where it's like I think unions, like for the most part, are important, but if they become too powerful, they can become a drag, right? The American car industry has needed to be built out now. It can't really compete. Like if you look at Tesla, like a new car company without all that like garbage lag, right, is just eating everybody's lunch, right? They can make better cars at a better price because they're not doing like all of this like back pay essentially for people. So yeah, that becomes a really really hard thing when you kind of have like problematic structures in your business, and there's no real fix for that. So it's hard. Like even if they were great as a company, they basically got this like dead weight that they're lagging around. And I don't even think they're that great as a company, but I do think they've improved. The American automakers have really improved. But yeah, I think it's going to be a very, very hard. It's going to be a hard investment for them for a while, just because, like, I mean, one of the things that you look at is like the profitability potential of a company, right? And like Tesla, even though like they're heavy into R&D, they're building robots, they're doing like they're still more profitable than these other companies that only have to make like that don't really have tons of R&D compared to Tesla. They only have to like make cars, and Tesla's got to pay Elon Musk whatever he wants too. So like they've got their own like profitability hurdles, and even then Tesla's way more profitable. And generally, I don't think they're way more profitable, just more profitable. Even then, right, we're talking about a mature business is not supposed to be they can be beaten on growth, but they're not supposed to be like beaten on profitability by an upstart that's like inventing new categories, doing a lot of research. It just shows what I'm talking about in the numbers.
I think that's a really good point. And just one follow up on this before we move on from this topic. So, like in the EV space, it's Tesla and everybody else. There's a few EV startups like Lucid, Rivian. Would you consider them more attractive than a legacy company like Ford or any other of the legacy companies? Or is it kind of Tesla or nothing in that area of the market?
I think it's a balance, right? Because I think we did have like we already saw like one of the like high growth EV companies collapse, right? I think it was like Fisker. I don't know if there was another one, but right, if they're good and solvent, and I haven't really done any kind of deep value analysis on them, but if they're like good and solvent, like yeah, I think that they're a good. I think that's good. But I also think that something like Tesla is way more exciting that we know is good and solvent. Like, because like Ford, I don't think I want any of the other ones just because like I don't know if they're going to be real businesses. I don't know if they can compete with Tesla. I don't know if they can compete with like Chinese cars, like EVs coming in and undercutting them. I'm much more confident in Tesla. And I just don't think like I'm starting to see some Lucids and some Rivians on the road, and they actually look pretty cool. But I just don't know about I don't know about their staying power, and I especially don't know about their staying power if we go more, if we go further down like the full self driving, because like I don't know about their capabilities for that, but I do not think that they compete well with Tesla on that front. So like if you have an EV that has full self driving and one that doesn't, and full self driving is allowed, like there's no comparison there, right? You're not going to buy the one that can't drive itself.
Yeah, no, that makes a lot of sense. I want to shout out our viewers of the stream. We've had over 1,200 people tune in between Twitter and YouTube. So thank you so much for joining in. We're about to start our last topic. So as we get into that, if you have any quick questions for us, feel free to comment them and we'll get to them after this. But I wanted to bring up Netflix and Spotify today because we've talked about the changing environment in the entertainment space and how it's affected stocks like Disney, Warner Bros., several others. It seems like Netflix and Spotify, maybe those stocks' losses are these stocks' gains as they hit all-time highs recently. Do you have a favorite between those two that you would choose, or any others in the entertainment space that are kind of capitalizing on this new shift we're seeing?
I actually I like Netflix. I like Netflix and Spotify both. Well, there. All right, 1 second. I like them both. I'm not sure, and I like them both for the same reasons, right? I think they're well-run companies that monetize in intelligent ways and think about expanding their market in intelligent ways. And I dislike them both for the same reason, which is that I don't think there's clarity on the content in the long term, right? I think there's a lot of pressure on the creators in the video space. And I think that there's probably even more pressure on the creators in the music space. Like they don't even make any money off like music distribution. They only make their money off touring right now. So, I mean, those are both, you look at those businesses and there's fundamental problems in it. It's like when you used to look at the music industry, the old fundamental problem was the fact that everybody was stealing music because the record companies had no idea how to market their music. And that's the same problem now, but just like Spotify's figured out a way to like market the music and just like screw over the artists. And I think pretty much everybody gets screwed in that. Although I don't know about the record companies if they're doing better in this scenario. But it's just hard for me to like a company long term that doesn't have, you call it their supply chain figured out. And I don't think either of those companies have their supply chain figured out because the talent in their businesses don't like the arrangement. And there's a lot of issues with that. Who knows if there's more strikes coming? But yeah, I just think that structurally those businesses have a lot of problems, especially like if you look at the types of businesses that we like to invest in, right? These tech companies, these consumer cyclical ones, some healthcare ones, like, that Eli Lilly, these companies have like so much like upside and so much profitability and like real process and ability to bring products to market that are extremely profitable. It's like, how do you look at a company like that and compare it, like companies like that, and compare it to like a Netflix or a Spotify where the talent in their business is not happy, right? So I think that that's why I always struggle with those businesses. And if they look better in the short-term signals, I would like them, but I think they never look too good in the signals because there are those like looming problems over their businesses. So even if I see like I've taken Spotify and Netflix, I've taken them for a few rides, but they never look that good in the long-term signals, which makes me very, very sensitive on the short-term signals.
I think you brought up a great point about the relationship between the creators and the platforms and how there's a real problem there. And I think like the biggest problems provide the best opportunities for entrepreneurs. So I'm wondering if we'll see a challenger grow like from nowhere, from nothing, that kind of can fix that relationship. I don't know what the fixing would be. Maybe it's like you have to charge people. I don't know. I don't know how they fix it, but I'm wondering if we'll see some disruption there now.
I think we'll probably see platforms owned by artists. That's what I think is going to be like, where studios that start to manage the distribution and own the content more, and they're just like artist owned. And that will, if you cut out the like content owner studio, right? And it's just kind of the producers own, there's a lot more money to go around. Like, and you see that a little bit with like with these studios that have popped up that negotiate with Netflix and HBO, and they just kind of sell their projects to the highest bidder. But I think it could go a step further where like the streaming tech is becoming easier and easier. Why not have like something like a Disney Plus or anything like that, except all owned by the artists, right? And then you could just stream a block of their content, right? I think that that's the future. And I think that's an easier thing to pull off in music, right? You could just basically have like a bunch of artists come together, just be like, we could have an app for all our music. We'll throw our music on there. Like, it is a little annoying if you can't get the rest of the rights, but that's not particularly hard. Like, you could go up to all of those studios as well and then have like the same stuff. Just be like, we'll make you the same deal as Spotify, except you like own everything. And then, imagine if like, Taylor Swift and Beyonce and, a bunch of other people followed them, right? I'm just thinking of the two people that like most people want, like, and then the rest of them just like duplicated Spotify's business, except Spotify didn't have those artists and then they have the other one. Like, that could kill. I just think artists have to become a little bit more entrepreneurial, and they might not want to, and they might be fine with this arrangement because people like Taylor Swift and Beyonce be like, yeah, we don't want to shake things up too much. We make plenty of money in this way. But it's challenging. But if you think about how long it took for the music industry and like CDs and all that to break, and people were stealing music and all that, sometimes it takes a very long time to work out an inefficiency.
It's kind of funny that we started talking about this angle of this story because this affected my music listening personally, because one of my favorite artists, John Bellion, just was on a 6-year hiatus because of his deal. He like was screwed by it somehow, and he finally got out of it and just released a song like a week ago for the first time in 6 years. But it's a real like problem for artists out there. But I don't see any questions, and I know we're approaching the end. So do you want to do our switch over or hang around for a minute or two, see if we get any pop-up
Well, let's
questions?
do the switch. You can ask questions, and I'll field them when I'm
No
back.
problem. All right, so we'll see George on the other side. Hang with me, chat. I'll be taking you through our switchover as George is going to go to the Model Portfolio Update Studio, otherwise known as the Prospero.Ai Laboratory. And you'll get to see the live moves that he makes in the market in a portfolio that's beaten the SPY by 80% year to date. So great value there. Thanks for hanging with us today. I hope you enjoyed the topic so far. I'm going to do a live look at the markets as we switch over, see if anything's changed. It doesn't look like there's been too much action, although the QQQ and the SPY are green, albeit very, very slightly. QQQ 0.06, SPY 0.02. But they are green, so good to see that they've trended slightly higher throughout the day. Let's see if the net option sentiment has changed at all for both. At the beginning of the stream, the QQQ was 56 and the SPY was 44. So I'll check back into those right now and see if anything has changed. Okay, so the QQQ is exactly the same, still at 56. So bullish level, and the SPY is at 44 still. So no movement in those numbers. QQQ 12 points ahead of the SPY. So slightly more bullishness amongst the tech sector, which is kind of a switch up. I think the SPY was leading definitely towards, back in August and July, the end of the summer. It seemed like SPY was a bit ahead. So maybe we're going to see the tech rally come back in Q4. I know a lot of the AI stocks have kind of been just trending sideways for a bit now. Maybe that's a good sign for those companies. While I have you all here and it's just me, I might as well ask you to like the stream if you enjoyed the content so far today. I love when I see us hit double digits on YouTube. So let's try to get up to 10 likes. I know we have some viewers in there. And then on Twitter as well. Let's see the love. And if you want to see, George is going to be doing the model portfolio. But if you want to see or hear us talk about any topics, if you want to see any stocks brought up specifically that you're interested in, comment them right now. I'll be sure to bring them all up as we're doing the model portfolio. But if not, we'll just get into it. No movement in the net option sentiments since the beginning of the stream, George.
Movement. All right, let's get this going. Get everything set up. Okay.
All the markets are basically flatline, within 0.25% of plus or minus today. So pretty boring day in the stock market land.
Boring day. It's always a dangerous. Never sleep on the markets. All right, let's get.
Oh, we got a comment. Verizon has an outage in different parts of the country. I'm surprised their stock is not dropping.
Like a phone outage?
I'm wondering if that's related to the hurricane, possibly.
Oh, yeah. That makes sense. All right. Let's get a good share going here. Okay. this. Okay. Materials.
Tech and communications look like they are showing surprising strength in Friday's large cap growth. Issues. We still don't want to target anything based on what we were seeing here. And we'll be opportunistic with momentum score. QQQ net option sentiment is at 56 and SPY at 44. Nothing that would change our view too much. Here of being cautiously bullish. Even with large cap growth having a tough Friday, it is the best on a 1 week time frame. We feel good about this given our strategy can best be described as defensive with opportunistic large cap growth aggression.
Oh, PDD at the top here. How's PDD doing today?
PDD is down 1%.
What? BBY is a 90 upside? Best Buy? Wait, I gotta look in the Prospero app.
What are our signals seeing?
No, that's not right. Not right. Oh, God, I'm being a fucking idiot. Oh my God, that's so hilarious. All right. I didn't change. I didn't change from this. Okay, that's hilarious. Yep, let's look at the real numbers here and see how far off. There's no way. Okay, yeah, that's more like it. 59. I do think I still want this because I haven't. I'm gonna make some China bets. A big portfolio, I think that's fine. Wait, Scott's Miracle Grow. I mean, this is looking okay. We're gonna do this too. We've shorted that recently, so it must have turned around a lot. Let's get to the bottom here. Some familiar faces here. Oh, Lucid. What is going on with Lucid? I might short this right now.
Yeah, that upside downside looks pretty bad. 83 downside for those who are just viewing versus 9 upside.
But it's like it's not. We'll leave it for now because it's not. It's actually got pretty decent price action. But we're gonna have our eye on it. Oh God. Okay. What are we looking at here? Fox F. Fox F is always. What is J Industrials? Ooh, what's LNW? This is looking to be in great. What's the trend on LNW net option sentiment? Light and Wonder. Ooh, Casino.
It is trending lower lows, lower highs. It is currently at 25.
We are getting into LNW right now. It is on an upswing on the 10-minute. I mean, 4 hours, it's in a terrible trend. We're going to keep our eye on this. But we're definitely interested. Okay, HP. I don't want to short this energy. HSBC, sure. Ooh, PPBT. What's going on with PPBT? Oh no, it's too small cap. It's too small cap for. I'm gonna look at it actually. That's like micro cap. Purple biotech. Yeah, I don't want to do this. It's a 9 million. Okay, this is more like it. Okay. Oh, not purple. All right, so. Oh, damn, I changed it. Whatever. 9. Oops. Well. We changed our minds. We're gonna do LNW. What does Light and Wonder do? See, this is the beauty of Prospero.
Cuts out all the noise. Down to knowing what the company does.
I'm a little interested in this NUVB too, but we got to do a little more research on small cap.
Light and Wonder is a gambling company.
Oh yeah, we saw that. What do they do? Yeah, what kind of gambling?
They do slot machines, table games, shuffling machines, and casino management systems. Its brands include Bailey, WMS, and Shuffle Master.
All right, let's see what we're exiting now. Oh, we had a CHK already. Oh well. We'll grab the second one. It's doing very well. Ooh, okay, yeah. In video, we keep on like going back and forth. All right, one. Interesting. I'm wondering if we want to. I think I want to maybe go a little higher than we normally do, just to be conservative. We definitely have more longs than shorts. All right, let's check out the shorts. It's 39. Yeah. This is not. I will say this like automated cutting is really like helpful to like keep the portfolio smaller. It's been like way easier to not just like, oh, damn, okay. All of these, and we'll get rid of 3. Not these. We're keeping 1. Okay, I like this. We can send it now for a 12.15. All right, I think we're good. All right, we did it. I thought we were going to do 12.20. We made 12.15. All right, any questions?
I don't see any questions. Excited to see what happens in the market over the coming days before we meet again Wednesday, 3 p.m. for all of our viewers. Can't wait to see everybody back then. But until then, have a great day. See you all then.
All right. Thanks a lot.
Bye.